So I'm going to make a really quick video, and there was something I was talking to one of my clients about, and the question came up about whether or not it makes sense to pay your mortgage with a credit card. So just for reference, I'm going to be using a article that was written back in January 12th, and to give credit where it's due, it was written by a Holly Johnson and a Dia Adams from Ford's Advisor. Basically, that's a part of Forbes where they talk about typical home credit and finances. So basically, they just give out advice to people who are trying to understand basics about financing. So first of all, I'll say this. You know me, I've made a number of videos about how to build your credit score to get a perfect credit score like I have. I've also focused for a very long time about getting points. It's funny that even on this screen that I'm looking at, it just so happens that they're showing one of the credit cards that I have, the Capital One Venture Rewards credit card, which I like to use because I travel internationally. And since I refuse to fly economy class and I need business class seating, the extra money that I get from the rewards that I get back from all of my expenses is always going to be probably used either booking a hotel or getting a business class seat. Now, one of the things I should also point out is they also have another card. They have the Capital One Venture, but then they have the Capital One Venture One. So there's the Venture One, and then there's also the Venture. The difference is one of them has a $95 fee and the other one doesn't. But when you're paying the fee, it gives you 2 times rewards instead of like 1.5 rewards, 1.5 instead of 2. Over time, the difference is negligible, but having that extra half a point actually helps. Okay, so the bottom line is, the way I see it is, if you have a job and you have enough money coming in, you understand your finances a lot better than I do. But if you know that you've got the money coming in, then it makes a lot of sense to pay everything with your credit card. Now, some people like Dave Ramsey and a lot of these fake cryptocurrency gurus would try to advise you against that. But what you don't understand is that because of the Federal Reserve's monetary policy, because of the fact that they've reduced interest rates so low, what they've ultimately done is they've caused inflation to rise. When you reduce the difficulty of getting credit, it makes it so more people can get credit. That causes commodity prices to rise because now you have more demand than you have supply. Houses are commodities. Oil is a commodity. Food is a commodity. Transportation is a commodity. Cars are commodities. So you've probably noticed, you can tell me if I'm wrong, you've probably noticed the price of used cars have gone up. The price of new cars has gone up. The price of oil has gone up. The price of houses has gone up. The price of everything has gone up. It's called inflation. Inflation is when the prices rise because you've caused a reduction in the value of the dollar. So, not to spend too much time on that, spending money on your credit card, as long as you pay off the bill immediately, as soon as you see that bill, you pay it off. That means that you will not pay interest, and that also means that you won't pay any finance charges or fees. Now, I have to say finance charges are something that we have to be careful with, and I'm going to explain why. So they say there's a few reasons why consumers might want to pay their mortgage with a credit card, at least for a while. In times of financial hardship. Now, first of all, let me stop right there. You do not want to be paying anything in times of financial hardship on a credit card because you have no idea in that case whether or not your next check is coming at all. So you could end up racking up credit card debt that you can't pay off. So that one we're going to be careful with. What we really want to do is focus on in times of financial, everything's going good. In times of financial wealth and plethora of wealth. We don't want to do shit on a credit card when you're running low on funds. That's just stupid. Okay, paying a mortgage with a credit card can help you buy some time and even give you the option to pay off a single mortgage payment over several months. Okay, not only that, but paying a mortgage with a credit card can be the ticket to racking up a ton of rewards or even earning a sizable welcome bonus that you wouldn't have normally earned doing regular spending. So I did some videos about credit cards. Some of these credit cards say we'll give you a $200 or $300 or $500 reward, but you have to spend $3,000 within a certain period of time. Now, a mortgage is usually going to be somewhere around close to $2,000 a month, maybe $1,500 a month. So if you pay off the mortgage within, let's say you have a $1,500 a month mortgage, if you make 3 credit card payments in 3 months, you'll have spent over $3,500. That can easily beat the system that the credit cards have set up. Here's the problem, though. Most banks, in the old days, people used to pay off their mortgage with their credit card. But prior to 2008, the banks didn't care because the banks knew that if you were late with a payment, they were going to make money off you with the credit card. But something funny happened around 2008. Once we had that financial crisis, people actually started to save money. They actually started to cut back on credit cards because, they were feeling scarcity. They were feeling afraid. So people actually started to, at that point, try to make better financial decisions. Back then, I was using a debit card to pay for everything. But the problem was I was getting rewards. Banks realized, wait a minute, if these people are paying everything on a debit card, we're not going to make money off them. So what did the banks do? They said, no, you know what we're going to do? We're going to take away rewards from debit cards. We're only going to put it on credit cards. Most credit cards rewards are subsidized by all those people out there who do not pay their credit card bill on time and keep it paid off. So ultimately, the banks are smarter than we are. As soon as they see that they're losing money, that's when they start making radical changes. So one of the changes that they did make was they made it difficult, if not impossible, for you to pay your mortgage with a credit card. Some bills that you would like to pay with your credit card impose fees on you. They're saying that, let's say, for example, you're paying your mortgage with a credit card results in a 2.5% fee. Sometimes you'll notice that when you try to pay a bill online, they say, okay, well, if you use your credit card, it's going to be a 2.5% fee. However, if you use a check by phone, we won't give you a fee on that. Because if you do a check by phone, they're taking the money directly out of your bank account. If you do a credit card payment, some of them may have to pay a transaction fee, and they're going to charge that fee to you plus interest. So in the old days, it used to be easy to pay your mortgage with your credit card, but what they ultimately saw was that people were doing that and they weren't making enough money off of it. So what they did was they started imposing fees. So they're saying, in that case, you could pay your mortgage with a credit card, pay your credit card bill in full each month to avoid interest, that's the key, and pocket 0.5% in rewards. So what's the answer to this? How do you pay your mortgage with a credit card? Well, while paying your mortgage with a credit card can seem like a pain, there are a couple of scenarios where the added rewards use are worth it. But how do you do it? How do you pay your home loan with a credit card? To this, they suggest a couple of things. First of all, converting gift cards into money orders. They suggest you can use plastic.com, which we're going to talk about in a minute. Plastic.com is really what this article is about. This is almost an advertisement for plastic.com. Now, I don't think Plastic paid for this, but ultimately, plastic.com is a website service that allows you to pay just about anything with your credit card. Now, this circumvents the blocks that the bank has on not being able to pay certain things with your credit card. Like, for example, your car loan, your home loan. Those are two of the largest expenses you're likely to have every single month. If you could pay your car loan and your home loan, you might be spending, let's say, $3,000. Let's say you have a car for $1,000 a month. Let's say you have a house for $2,000 a month. You'd be paying $3,000 a month on your credit card. $3,000 a month is roughly at a 1%. That's 3,000 points per month, right? Now, Venture One gives you 2 points for every dollar spent. So that would be 6,000 points, which translates to $60. So let's think about that. The Capital One Venture One card has 2 points for every dollar spent. So if you were making $60 every single, what is it? If you're making I'm sorry, not $60. If you were making 6,000 points and translating that to $60, that would be more than 50% of the annual fee for that card, because they're charging you $95 to use that card. So in just 2 months, you'd have gotten back enough money in just 2 months to pay back the fee to use the Capital One Venture card. Hopefully that makes sense. So what I'm saying is, on the card that I would have if I was doing it, I don't pay an annual fee. So if I was paying this, let's say $3,000 a month, I'd be getting back about $30 a month worth of rewards. Bank ain't gonna let that happen. So what do? Even Plastic used to charge 2.5%. What they did was they said, oh, you motherfuckers gonna come here and use this service? Okay, we're gonna raise it to 2.85. So if you use Plastic, that's the website. Plastic allows you to pay your bills with your credit card, but they are going to charge you 2.85%. So the pricing, as you can see, they have an app, they have a desktop app, they have a cell phone app. They say, accept credit cards free. Your customer pays a 2.85% fee. Accept bank transfers, no problem. And they don't have a problem with bank transfers because they're going to take that money directly off of your bank account using the routing numbers for your checks. Pay with Plastic. If you pay with Plastic, there's a fee right here. Credit and debit cards, 2.85%. Bank-to-bank ACH transfer, that means that you're giving them your check, and the check has a routing number that's free. Wire transfer payment, they're charging you $40 to send money in the U.S., and they're charging you $60 internationally. Now, let me tell you something. As far as wire transfers, I've had some background with that. Transferring money with Western Union, MoneyGram, they're charging you $10 no matter how much you send. So if you send somebody $100, they're charging you $10 on that shit. So when they're telling you that they're going to charge you $40 to wire within the U.S. and $60 internationally, obviously I got a problem with that. See, I try to avoid fees. I avoid fees. I avoid interest. I don't like the sound of $40 or $60 when I know that if I need to send somebody money, it's going to cost me $10 with Western Union or $10 with MoneyGram. So this is what we're talking about. We're talking about using Plastic in order to pay bills. Now, once again, if you're the type of person who's paying an annual fee for a credit card, and let's say you're a smart person and you're using your business to pay that fee and you're not personally paying it yourself, but you do have access to the card. If you have a fee on your credit card, like you're using American Express or Discover or something, and there's an annual fee of, let's say, $100, possibly with American Express, they can charge $300. And American Express, especially with some cards, they have the Centurion, the Black card. That's $250,000 a year that you have to spend on it. And instead of having an annual fee, they say you have to spend $250,000 a year. Some of these fees are incredibly huge. Some of these fees are just insane. But what Plastic is trying to do is they're charging you a 2.85% fee. And if you're really good with your finances, you can make that fee negligible by racking up so many rewards points or so many concierge service points that you can make that 2.85% negligible. So this is their website. So just in case one of you is wondering, oh, well, I've got money coming in. I have a credit card. I'd like to get more points on my credit card. But how do I pay off my car and my house using a credit card? Well, that's what Plastic can do for you. So that's all I really wanted to talk about with this video. Again, to me, this doesn't make sense unless you can figure out ways to get around the fee or to make it negligible. Now, if you're a person, again, if you have a business and your business credit card allows you to do this level of spending and you just pay it back there, this might work for you. But the bottom line is, how do you avoid the fees? Now, I'll tell you like this. If it was possible to avoid any and all fees, like, for instance, when I pay with my credit card, I'll buy gas with my credit card, but I refuse to use the credit card if they're going to charge like 10 or 20 cents to use the credit card. I'll use either cash or I'll use a debit card. As long as you can avoid the fees, it's all good. But this is one of the reasons why you have to read the fine print very carefully, because there are some people out there who are still paying their mortgage with their credit card, and then they'll go to their credit card and pay their credit card off. And I should also point out that if you're the type of person who's trying to build your credit, this might actually be very good for you. And the reason why is because if the bank knows that you're paying your mortgage with a credit card and you're also paying, let's say, your card note with a credit card, it might actually make it easier for you to request to have your credit limits raised on those cards. And of course, I've taught this before, the more credit limit you have, the better that is for your overall credit, especially if you're keeping the amount of credit you're using per month as low as possible. Because the game is very simple. The banks are willing to give you credit. Credit is your way of proving that you're willing to pay back every dime that you're borrowing. But the problem is, in order to build your credit, you have to show the bank that as much credit as they give you, you're only willing to spend a small amount of it, and you're going to pay that amount right back. It's very simple when you think about it. It's just like loaning somebody money. If somebody comes to you for $100 and you loan them $100, and then they come right back to you and they pay that $100 back immediately, that'll make you feel comfortable with loaning them more money in the future. If you loan them $1,000 and they pay it right back, that'll make you feel more comfortable with loaning them more money in the future. That's exactly how the banks work. That's exactly how they work. But when you're trying to factor in all of these complex credit cards and these complex payment methods, that's when everything starts to get muddy. But all I'm going to say is this. If you want to build rewards points on your cards as quickly as possible, call up the people you pay your bills to. Call up your water company. Call up your oil company. Call up your gas company. Call up your electricity company and ask them, if I set up a recurring payment with my credit card, are you going to charge me a fee? If they say, no, we're not going to charge you a fee, that's perfect. In fact, to tell you the truth, I did that with my oil company that makes oil deliveries to the house that I have tenants in. And they said, we're not charging you a fee for your credit card. So I was like, okay, that's perfect. So that way, when the bills come, you'll see it immediately on your app, on your phone, on your credit card, and then you just pay it off. You pay it off using the cash out of your bank. And you have to understand, because of the Federal Reserve's policies, it makes you no money right now to save money. I mean, what do you get? I looked at my bank accounts last night. I have thousands upon thousands of dollars in them. And the interest rate is so low that I'm not really earning much money on it. I'm only keeping the cash just in case of emergency, in case I need cash. The stock market is paying me way more in dividends than I'd be earning with any of the interest earning savings accounts. There's no interest earning savings account in the world right now that's paying you enough to beat the stock market. A long time ago, somebody explained that to me. 10, 20 years ago. It was a long time ago. But somebody explained, yeah, your money will do better in the stock market than it will in the bank. Now, my problem was, okay, I don't trust the stock market because the stock market can go up one day and go down the other day. But as you've seen over the past, 15 years, the Dow Jones has only risen. It's, above 30,000? The S&P 500 has only risen. What's happening is these companies are getting richer and richer and richer because people are buying their products. And each one of these big corporations is turning into a $1 trillion corporation. Facebook, Apple, Microsoft, all of them are turning into multiple $1 trillion corporations. Now, most of that is also due to the inflation. The money that they have, or the assets that they have, is now valued so much higher because of inflation. The price of everything has gone up. Stocks are no different than the commodities. They have a price where you can buy them. Everything has gone up. So what I'm trying to ultimately say is that you have to figure out a way to make your money work for you. Your cash is good in the bank, but you need to leverage your credit cards against each and every purchase you make so that you can make that cash earn you something in return, whether it's travel rewards so that you can fly business class, whether it's points that you're gaining so that you get a cash back check. I was talking to one of my uncles. He still uses Discover, and he uses Discover. I don't know why, but he says that when he gets his rewards back in the form of a check, and they just give him a check. Personally, I don't need that extra money, so I would rather save it up as points and then fly internationally. But some people do it differently, you know. Okay, fine, no problem. But my point is, you have to figure out ways to make your cash work for you, even though in this society right now it's not working. So once again, call up your companies that you pay your bills to every month. See if they're willing to allow you to set up recurring payments with your credit card. You will take your cash into the bank account. You will save your cash in the bank account. And once you get those credit card bills, as they roll in one after the next, all you got to do is take that cash, pay the credit card. And that's it. So hopefully this video is simple and makes sense to you. If you have questions about what I said, or if you have a comment about what I said, you can feel free to put that in the comment section. And that's basically it. So that's, if you never heard of plastic before, well, now you heard of plastic. And they got this chick on here, so they must be serious. She's got a computer, she's got a Mac or something, so she must be serious about her money. So again, any questions, comments, criticism, just put them in the comments section, and hopefully you understood everything I was talking about.